All right, guys, what's going on? Happy Saturday, everybody. Happy weekend. Hope everyone's nice and rested. Here is our weekly recap, kind of a debriefing of the week, going over what happened in the market and also preview the upcoming week. My name is Carlos Garcia. I'm the founder and CEO of GAR Capital. Thank you so much for taking the time out of your day to watch this video and joining me every day when we have the market open at 9 a.m. Eastern Standard Time live on the YouTube channel. If you don't want to miss any of our upcoming videos, make sure to hit the notifications button, the bell icon there on YouTube. Appreciate the support as always. Glad to be with you. August 26th, 2023 on a Saturday. Let's go ahead and talk about the day that happened yesterday. Dow Jones closed up 247 points, NASDAQ up 126 points, S&P up 0.67%. The VIX, we talked about that on Friday morning. Down about 8.84%, usual the VIX smash program on Fridays. So that's been rather interesting. So that's kind of the majors in terms of the market. Yields were flat. They were higher and then pulled back post-Powell. The dollar was up slightly or was higher and then pulled back. I don't have a quote on the dollar as of now, but I do remember that it was rather elevated but pulled back from the highs. If you remember the video on Friday, and we did another video, I believe the morning note, I think it was on Tuesday, where I talked about what I expected from Jackson Hole. And what I expected from Jackson Hole was a pullback on the dollar and yields, regardless of what Powell really says. And the only reason was really technically based, where the dollar was overbought. It was at around 70 RSI, and the 10-year Treasury yield was also upcoming at an overbought area. And the reason that's very important, guys, is that because we don't have much liquidity. We don't have a lot of liquidity. We don't have a lot of volume. Other than NVIDIA, which had the second biggest spike in terms of their volume for the day, really since their previous earnings report in the last 52 weeks, that was basically it. We did have elevated volume on Thursday, elevated volume on Friday. But Wednesday and Tuesday and Monday were very similar to Thursday and Friday beforehand. And the reason I'm talking about that is because that's where technicals kind of take over, where it's just algorithms kind of just ping-ponging off each other. Doesn't mean we can't trade it. It's just that we need to understand who we're competing against. We're competing against machines. Who knows how they're coded? But again, at least with technical analysis, we can kind of see the area of where the next buy and sell orders come. Obviously, when it comes to momentum, that's what we want. We just haven't really gotten it, which is the most difficult part. So we're taking a look at the S&P 500 futures. That day on Tuesday, I believe, I talked about the dollar being lower and yields being lower in terms of that day because we were overbought. I also said on Friday that I believe the market would go higher. Now, they made you wait for that, but that's what happened. So I did expect the market to go higher. We ended up doing that. But I even said I would not trade calls on that unless we started breaking things, and we really didn't. What happened on Friday was right at 9, we just dropped and kind of teased the bears right when Powell was speaking, right near a kind of a key level of support range that you guys have probably remembered. And we talked about that head and shoulders formation on the S&P 500. And then we also got that bounce off that trend line. I talked about that on the blog as well and on Watches and Charts. And the trend line that I'm speaking about is the one really since October. The wick one. Really from that wick level, it was also breached in March. And we've been retesting and kind of holding that level. We held that level in May too. Kind of got close in June. So it seems that other than the month of July is the only time that we did not test that trend line other than January. January, December, November. How about that? November, December, January, and July. Those are the only months where this trend line was not changed. The point I'm trying to make is that the uptrend has not changed. But right now we're seeing just ping pong, very low liquidity, very low volume, seasonality weak. We've been saying it really since July 16th. I said that we're up now. I think the market was at 45.50 or so, 45.60. And I said, if you needed to take the money, you take it. That was in June 15th. Does that really change anything? July 15th, excuse me. Does that really change anything moving forward? Not necessarily, because we haven't broken anything. 43.72. So you're at a point now where you're kind of looking at it where the Bears have an argument, the Bulls have an argument. And again, if you're a poker player, you have good cards. It's not like they're terrible cards, but is it the best risk reward to do anything here? No. And that's one thing that we did not do on Friday was we just waited for things to play out. And we just took our lumps with it. It was a tough week. It was a tough week. We're going to go over that here in a second. So that bearish engulfing candle, that was on Thursday. Everyone thought, whoa, that's a bearish candle. What happens? We bounced anyways, just as I said on Friday. Had a feeling that we were just going to bounce again on nothing really changing fundamentally. There was nothing that Powell said that we don't know already. It's just reiterating the fact. I think the expectation, in my opinion, was that we were going to get the August flush again from the previous Jackson Hole Summit. And you see it right here, right around that time. And then we got this leg down. There's key differences in that analog. The number one key difference, that was a bear market in 2022. We tagged the 200-day moving average, and then we rejected, right? We talked about that false pivot, not really a pivot, and the market fell to new lows, the October lows. That took about 2 months. So looking at this in a vacuum, we're not in a bear market. We're in a bull market. So kind of the inverse happened. Right as Powell spoke, we got a green candle. So if in a bear market, we got a false breakout, maybe in a bull market, we get a false breakdown. The yellow line of that trend line was a very key one back in 2022. We talked about it pretty much all year on that 2022 one, right? Look at the red line, a key trend line from the lows. That was a key trend line from the highs. You test it and reject it. Boy, testing and rejecting. Doesn't that look rather familiar? We're just inversing it here. So you can have that argument if you're a bull here in terms of price action. I kind of lean with that camp. And the reason I say that is only because this has really just been chop. This has been profit taking, just low volume. We'll see what happens in September. But if we go ahead and actually look at the seasonality chart that we've been talking about, and again, not exactly one for one with August. We didn't get that end of the week, end of the month spike. Maybe we do this week. Who knows? We only have a couple of days left. And you see September, kind of choppy the first couple of weeks. Then we'll get a little bit of a pull higher, and then we'll pull back. And then October is where we expect, at least seasonally speaking, to get a pullback. Now, would that be 4,600 reject to 4,400? Or that be 4,487 reject to 4,200? That remains to be seen. We just have to go step by step there. But that's looking like here that we'll probably get a little more upside bounce. And the reason I say that is because finally we're going to start getting traders back into the office, more liquidity, more volume after Labor Day. Speaking of Labor Day, not this Monday, but the next one is, remember, September 1st is on Thursday. So you kind of have that midweek month change for August 31st being the last day on Wednesday. So that's what I'm looking at in terms of the S&P. Very similar to the NASDAQ, as you can see. The only thing on the NASDAQ is that we broke that trend line. That pretty much the trend line since March that's been holding up. We're below the 50. We're slightly above the 20. So again, that's probably indicating a little more upside as long as we hold that level. Right here, you see that 20-day, as long as we get above that. That's what we want. We're not there yet. We're at 14,972. Kind of been stuck within this support here. Again, you could say this is a bearish engulfing, kind of the rejection too. Let's go and expand it to we have the 2-year basis. Let's expand a little bit. Did we have that similar trend line? We did. August. How interesting. But we don't have that analog here in terms of a trend line here because we broke it. That's the one from March. So if we do it from the one of October, you can see that was broken back in January. So it's not one for one. It wouldn't be perfect because you still have some breakdown. So again, not as clean as an S&P comparison between the bear market rally and then you have here possible in terms of the S&P a bear trap, since one right here was a bear market where we tested that 200-day, we tested that trend line from January, the highs, and we rejected. Again, could be interesting that we have the trend line from the bottom. Did we test that trend line? We did, and we bounced. Maybe that's the case moving forward. We need to see. Does that mean we may have a little more discounts in the future in terms of stocks? Could be. I mean, depends on the sector. Depends on what you're looking for. I just don't think right now is a time to run out and buy when you're getting risk-free capital back, 4.5% on some online savings while you wait. In this chop anyways. In September, we'll start getting a little more action and see where we go from there. So that's the market. That's what I see. Let's go to the week. Not a good one, but you know what? Let's go over each one together. So Tesla, we played the 235 calls on August 21st. We're going to go over that trade. It should be rather quick. That's why I went a little more over the macro and the charts in terms of the S&P, since we really didn't trade much this week. It was just a pretty tough one all around. Looking at Tesla, did that get in the money? It did. It did get in the money. So I didn't have it, so I closed that out. I think most of the majority, everyone else did. No one really mentioned that they still held it. But Tesla, pretty simple stuff, getting above the 100-day. We do have a gap to fill now below. We do have that trend line that we haven't tested yet, but we want to get above 241.75, and I want to take a look at the 250 calls on Tesla, possibly for next week. Let's see if we get a little more juice and get above the 20-day, 241.75. You better believe Tesla will be on the watch list. It's been pretty much the moneymaker in the month of August. So shout out to Tesla for being such a great stock to trade. Makes us sweat a little bit, but it was a great trade. You could see that we got as high as 344% in the money. I didn't track it after that because I didn't hold. So I got 40%. Happy with that. A lot of people got it. They got some money on Tesla. We can go to the trophy room to see exactly how everyone did in terms of Tesla. IWM, that was on Friday. Here we go, some Tesla gains. Good stuff. Nice one, G. Tesla, nice. Oh, about $1,000. Well done. And then Nick, 344%. Yeah, I didn't have that. So all good. People took it, and that's the most important thing. Tesla was a nice return for these guys. Amazon was a tough one. Amazon was in the money. That's the worst part. Went over this in the morning note. Let's start from Monday. Here's on the hourly chart. Monday, we got into Tuesday. Wednesday, we got into Tuesday for the pop higher. Waiting to get to that 136 level. We played the 137 calls, as you can see. 137 calls. August 25th was the expiry. August 21st was the exact date. The 21st, I want to say, if I can get my calendar out here. 21st was a Monday. So we played Amazon for more upside. We actually broke it down on the watches and charts. It was part of the watches and charts. So let's take a look at Amazon here. And again, guys, we explained everything every single time. So above 135, we can play upside to 137, 140. That right there is your 20-day. Close below 130, we can play down to 125, 120. That was from Nick DiGiacomo, one of our teachers who does the watch list. So well done to him. We got above 135 here, rejected on us, got back up there again, chopped. Tuesday, more of the same, just more chop. Wednesday, we had a chance to get out of Amazon, I think down 30%, but we said, let's hold it for NVIDIA. We know where we're going to go. We're going to get to 137, which is our target. And we did. We got there after hours, held after hours. We're at 138. Mind you, you cannot trade options after hours. Can't get out until 9:30. So we're holding, we're looking good, we're happy, very, very happy, and then just the sell order right first thing in the morning. Absolutely brutal. But that happens. It happens more times than you know. And you just have to kind of roll with it. Nothing we could have changed there. We knew where we were going. We hit in the money. It reversed. And that's it. Total reversal, especially with just 1 day left. It was absolutely brutal to see. And then on Friday, another move down. Went a little higher, but it got to 133. What does that mean? Chop. That's it. Got chopped. And that's very unfortunate. But that's just part of the nature, guys. That's part of the beast. You know, I did a podcast regarding trader psychology, and you just can't personalize it at this point. You just kind of look back and say, damn, that just sucks. And trust me, it gets worse with one more. Boeing. Boeing, we traded that on Monday, waiting for the upside break. Let's go ahead and see the breakdown on Boeing. Boeing, I talked about the 230 target. Again, above 230, we're looking for the 240 to 245 calls. We're leaning more upside. Below 220, we want to do the 215, 210 puts. So again, I talked about that. We just want to hold that 50 DMA at 220. That's kind of the level that we're holding. That's what we wanted. So we broke that down on Sunday. So let's take a look at Boeing here. First, I'm going to show you guys the daily. Daily is going to really explain everything. A lot of really perfect symmetric lines in terms of resistance and support, am I right? That 220 level being very key resistance. What happens when we break above resistance and it holds? It becomes new support, right? Kind of charting 101. We do have a gap to fill here. That has been filled. And again, there's a part 2 to this, of this Boeing trade. I'm just going to let you guys know. So let's remove that. We are now above the 50-day. We still got more to go to the 20. Now we have a gap to fill here at 227.04. Could that be something that we play? Probably, but Boeing has been rather mean to us quite lately. Still an upside trend. We bounced right at that 220 level. That was previous resistance. We can use Boeing 220 level as our support moving forward since now it held. But again, we probably want to see this gap fill first at 227.05, and then we can target 230, 235. What I don't want is that we get that gap fill first thing on Monday or Tuesday if we chop around or something, and then we reject back down to 220. That's just going to eat our premiums, especially in a very dry tape where you're just not getting a lot of liquidity. So here's the really crappy part about Boeing this time around. We filled on Monday. We knew where we were going. We got above 230. I think we filled it on Monday or Tuesday. I think it was on Tuesday. We got above, looking great. Wednesday, we started sliding. Right after hours, we get a Boeing headline from a supplier of a recall, I think on the 737 MAX. And what happens on Thursday? They just sell it. And then what happens on Friday? They sell it, and then they bounce it right to 223, holds a 220 support. Again, that's headline risk. That's very unfortunate, and sometimes we just got to eat it. But I did tell everyone on the watches and charts, BA broke my 220 level, like we talked about on Sunday. There is more downside since we're below the 50 DMA, but it feels like a chase here. We don't want a revenge trade either, but this Powell thing tomorrow, this was on Thursday, not the best RR right now. 215 puts for next week, the spread is wide. That's the downside gap level. The upside gap level can happen too. Best to sit this one out, look for another opportunity. And what happens? It gets to 212.88. I think one of our masterclass guys caught that Boeing short, so congrats to him. I did not signal that. And the reason I didn't is because the risk reward wasn't there, just like I stated. Doesn't mean you can't trade it. But again, I didn't want to send that as a signal. But we got that gap fill on the daily, and now we bounce from it. So it was really the question of, what was going to happen first? Are we going to get that downside gap first or that upside gap first after we got that Boeing headline? The downside happened first. Bounced pretty cleanly on the daily 100. We're above the 50 now. Now we just trek up to the 20 at 231, but you got to fill that 227.0 gap. Who knows if that fills on Monday or Tuesday, like I stated. It's just unfortunate with another headline. I mean, Amazon wasn't a headline. It was just pure dumpage right on. We didn't give a chance, and we were in the money. And Boeing was just one where the headline hit literally at the worst possible time. And here's what it really sucks. This right here was not natural buying. That was a headline as well. So take a look at the live market blog. And it's just one of those things you're just like, damn. Take a look at this here. Boeing flipped to green and moving higher. That's at 1:19 p.m. That was right here at 2:14. I said, and I went ahead and put the headline here. Boeing reportedly preparing to ship its first 737 MAX to China in 4 years. And what do I say? Why couldn't this headline come on Wednesday? If they would have just flipped the headlines, how much was that candle worth? Or how much was that news worth? We started here at 214.81. We got to what? The top of 223. So what? $9? We were at 229. If that headline hits, even $4, we got it. 235 right there off the 230 level where we tanked. So 229, let's just go ahead and add $5. 234 on a Wednesday, we got that all day. But, the market gods were not very kind to us this week. And that's why we didn't trade more. Again, I did not want to chase. I did not want to revenge it. Not with this tape. Risk reward was crap. got to just eat it. Got to eat your vegetables on this one, guys. Tough one. 1 out of 3. I'm just happy that it could have been worse. It could have been a lot worse if we traded more. Let's just take a step back. We say, okay, this tape sucks. Amazon and Boeing, I mean, pretty much the worst case scenarios. Sure, we got Tesla. We leave it there. August has not been pretty. 11 out of 18. Those last 2 were really hurting. We were in a nice streak. Before that, it's just been a choppy tape, guys. That's all it's been. At least have the solace that the month is almost over. And that after Labor Day, which is next Monday, not this Monday coming up, the next one, we'll get some volume coming in. With that being said, let's go to Forex Factory and let's start talking about what's coming up this week. Let's start previewing the week. We talked about S&P. We talked about the NASDAQ as well. In terms of the broader market, let's see this week. Apply settings. All right. Here we go. We got some stuff coming up. S&P CS Composite, huh? Change in selling of single-family homes. Okay, so that's housing, year-over-year housing. So we'll see that on Tuesday. Monday, nothing special. Consumer confidence on Tuesday at 10 a.m. JOLTS job openings. The Fed does watch that on Tuesday. We do have the private payroll number. Is the job market still strong? That's the key. Preliminary GDP number. Remember, we've talked about the Atlanta Fed having a 5.8 in terms of GDP. We'll see for sure what the GDP reading is, 2.4% or something. They're expecting being higher than that. 2.4 is pretty good. If we get a 3% GDP, that'd be nice, but we'll see what we get. Pending home sales, 0.08% is the expectations at the downside. Core PCE, this is the inflation reading that the Fed definitely keeps an eye on. Since Powell just spoke on Friday, nothing really has changed there. Again, they know their target, 2%. We don't know if they're going to raise in September. Fed futures are saying that they won't, and then the raising will be in November. Again, that's the expectation from traders. Employment claims, that's on Thursday the 31st. 236,000 is the expectation. We had lower than expected unemployment claims this past week. And then we have non-farm payroll report. 169,000 jobs is the expectation. No more 200, I guess. The previous number was 187. Remember, we had a revision down from the last couple of payroll reports. I think it was about less than 200,000 jobs that were revised lower. Unemployment rate, 3.5% is the expectation. And the ISM manufacturing PMI, the last reading of unemployment was 3.5%. The manufacturing PMI is expected to be in a contraction, which is below 50. In terms of news flow this week, GDP will be something I'm keeping an eye on for sure. The private payroll, I mean, they're so off. So again, it really doesn't move the needle. The core PCE, that's something maybe we get some deviation, I don't know. But the jobs number is going to be a big one, I would say, on Friday. It's not as big as people thought in terms of the reverberation to the market. It's not like, Forex trading back in 2013, 2014, 2015, where NFP was a wild market. Remember, it is still August into September. This reading is coming a day before a holiday. Expect volumes to be dry. Just keep your heads up. So we have making up to do. But the key is that with this week, do we want to really kind of push the issue? I think it's kind of the best bet is to focus on the high quality setups. We're going to focus on 30%, 40% and move on. We're going to get some juice flowing. I think Monday we'll get a couple, get that confidence back up for everybody, feel pretty good. And then, kind of leave it there. I think I'm not against just having a couple, kind of feel a little better, get that confidence up like I was stating before in terms of the market, in terms of your trading as we move into a new month of September. But the key is, guys, next Monday, the market is closed. So that Friday coming up with NFP, I don't expect to be too much. We may get a front load in terms of volume if there's any. Monday, Tuesday, Wednesday being the last day of the month. Thursday and Friday, I do not expect much. So Thursday and Friday, maybe there's a day you want to kind of take a day off from trading. Maybe that might be it. Thursday and Friday right before a long holiday. So just wanted to give you guys the heads up. The market is closed Labor Day Monday. All right, guys, we'll leave it there. Have a great rest of your weekend. Tough one all around. We talked about resiliency all the time. It seems like we talk about it all the time, but stay consistent over time. Year to date, we're still looking great. The month was pretty tough, but I want to see if we can end it at least on a good note and then kind of carry that momentum into September, kind of get back into where the season starts again. Season begins. We'll see what we get. Have a great rest of your day, guys. Cheers.